Hey, tell me about what you first feel about the whole GameStop thing going on.
Roaring Kitty, baby. Diamond hands. Let's go. Yeah.
So you own some GameStop?
No, I don't know.
Will you go on the record saying that you bought GameStop prior to buying GameStop in your own account? Or you bought GameStop for clients prior or after? Mother, yeah, Jesus.
Yeah, those things.
You get what I'm saying.
Yeah.
Did you buy it and then buy it in client accounts?
Yeah, I do not own GameStop, period. I do not own GameStop at this point. I did own it back in like the previous run up. I was playing around just for fun, just a little, but I was like, yeah, I mean, it was nothing.
I'm getting a little mad at these people.
There's too much risk here. There's too much risk here.
All right, some things you may not have known about this GameStop and the person behind all the chaos. He is a financial professional. He is not. Well, yeah, he's not an amateur. This is not someone that's like, woo, I've got a big following. Let me see what happens. He is a professional with designation, or with previously having designations and licenses that yours truly and that guy over there has. So I feel like you're being played a little bit. Should he be allowed to do this?
So it's interesting because what's going on, and so like to break it all down, I kind of want to get into and like break it down and like what his positions are and helping you to understand it if you're out there and you're watching. Because I mean, it's talking the meme stop thing. Meme stock. I can't talk either today, so is back. But what's happening is if we were to do this and we were to go out and purchase something and then share that we purchased that. There's a fine line with this.
In trouble. The fine line is we're in trouble.
Well, there's market manipulation that can be said, and that's kind of what's happening right this second. It's like, okay, is this guy actually manipulating the markets or not? And in our scenario, anything that is market manipulation, we're done. Like, we're canceled. Like, as far as our licensings go, like, you're in serious trouble.
Not only that, you cannot make that would be considered making a recommendation. If I said the stock that we bought today for our clients' portfolios, if I told you that ticker symbol, then I made a recommendation to you. Well, it was good enough for our clients. It must be good enough for you. That's where I know we get in trouble.
But this guy posted it on a Reddit thread or wherever, I think it was a Reddit thread, that he posted it saying, hey, he basically just posted his positions. Here's my positions. Does that classify as anything other than him just showing his position? Because the first post was him, sitting in a chair or somebody sitting in a chair, something else, random. The stock jumped. Then this happened. And then he just posted his positions, but he posted his positions and, has continued to hold through all of that.
By the way, you want to know how much he's up today? So he has the stock and he's got the calls. At least that's what he's posted.
And we'll talk about that in a minute. I want to kind of go through that a little bit.
Okay.
Share.
So he's up, I don't even, $9 million on the stock more. And he's up $66 million on those calls. Now, he was negative at some point because he bought that one day that he posted it, they were down. But as of now, so he was down $2.4 million when that was posted. As of this very moment today, he's up almost $70 million on just the calls.
Yeah. Yeah, just the calls. Now,
so I'm all for it now. Now I'm in.
So yeah, for real. So with these calls though, he has 120,000 calls, which equals 12 million shares of stock. He's bought calls for 12 million shares of stock. Now it's up over $5 from his purchase price. His price paid was $5.6754. And so basically at this point, with the stock being, give or take on the day, it's, 28.
Who cares?
$30.
The option's trading at $11. The mid price is $11.
Yeah.
So let's say he's in for 5, take 6 times 12 million.
That's how much money he's making right now.
That's why I just figured.
But if he continues to hold, and this is where I kind of want to break down and make sure like everybody's understanding. And honestly, we've done a lot on the side. Him and I and Dustin's background is options, and so we've done some trading, primarily selling calls and puts. So this guy bought the call. So when you buy the call, it's going to mean that you have the option then of buying that stock at that price. If the stock falls, well, obviously you're going to lose money. You put the money up for it. So he had to put the money up to buy this call. So $5 times 564 times 12.
He paid $564?
Yeah. So let's figure this up.
Oop, wrong one. So $6 million bucks.
567. I'm sorry.
On cash.
Either way, six.
If it was
million.
cash,
Okay.
we don't know whether it's margin or not.
So he put up 6 million, but stands to make that. But if he buys that, if he exercises the option at this point, what does that look like? Because there's a lot of talk of basically they're saying that pretty much he has to come up with more. He doesn't have to come up with more money. He's in the money so much that he just makes that money, right?
Well, he makes more at the moment by just closing out the calls because the stock's at $29. Well, let's say $30. So the stock's at $30, but the option is trading at $11. Mm-hmm. So the spread between him buying at 20 or buying the 20 strike price and $30 is only $10, right? So if he exercised the options today, he would have a $10 profit and he could immediately sell the stock even if he didn't have the money to pay for the stock. However, the call option is trading for $11. So it would make more sense to just simply close the calls and walk away, provided that he doesn't think it's going even any higher, right?
Yeah, because, he's got a $20 call. So he bought it saying, okay, the stock's $20 is the call. He paid the $564 for it, but now the basically he can sell the call for, you said what, $11?
$11 mid price right now. So the spread between 20 and 30 is $10. Forget what he paid for a second because he had to have paid that.
Okay.
So he has
slow this one down because I know if anybody's watching, it's like you know options. The guy knows options. Okay. So let's slow it down and break it down for the person that's like really looking at this and saying, hey, what the heck is going on? I really want them to understand the breakdown there.
It all started on a street in New York City with a tree at the top, and people would come together to exchange their goods. No? Okay.
Mr. Miyagi, I don't know what you're talking about.
No, the story of Wall Street. You don't know the actual story of the history of how Wall Street became what it is? Side topic. Okay.
Actually, no, but I have been to where the Federal Reserve was first talked about, a place called Jekyll Island.
I did take it there. Yeah, okay. So anyways, if you buy an option, let's say you buy a call option at, in this case, $20, then you have paid some amount for it. Let's pretend he paid $6 because it's close enough. So you make no money between $20 and $26 because you're in for the $6. So your actual basis or cost basis is 26. Now, your belief is that the stock is going to go well above that. And so, and it has in this case. So in his case, he took the $20 strike price, he paid $6 for it. And so anything over $26 for the price of the stock there, he will make profit, right? Well, what we're saying now is $20 strike price, he paid $6, but the stock is trading at $30. So it's now $10 higher than he thought. His cost is only $6. So he's made a profit of $4 right now if he wants to exercise.
And that's 4 times 12 million.
To be fair, that's a lot of money. So what I'm saying is there's no way he would close those. I mean, if he's truly knows what he's doing, there's no way he would exercise today, although...
But you said today he would have actually made more money because the call is actually trading higher.
There's still premium.
There's more money in the call right this second for what it's trading for, because anytime there's volatility in a stock, such as GameStop and what we've seen here recently with it,
or time to go until expiration.
Yeah, and you have the time to go. Absolutely. What ends up happening is when you have the volatility and a little bit more time on your side, then you have the potential for the actual premiums to be even higher.
Yep.
And that's what's happening in this case because, maybe the stock's at 30, so he's only could make 4 on one sense, but the premium, they're saying, well, hey, potentially this thing goes back up to $40, $50.
Yeah.
So that's why it's actually trading higher. It's kind of it's really confusing if you've never understood, and like it's something like that I've learned. Yeah.
You're right on. And plus, just for fun and looking at this, people are believing that it will be well above $30 because the $20 strike price, if you were to buy those calls today, is trading right now for $11. And 150,000 contracts have traded hands just today, which is way above average. The average is like 1,900 contracts.
Unreal.
So people believe they're willing to pay $11 for a $20, what's called an in-the-money call, give up $11, which is 50% of the strike price, if you think about it. It's kind of astronomical.
Yeah.
And so in order for those people to make a profit, they paid $11. That means they need this to be over $31, hopefully a lot over it by expiration. And all of that driven by this one guy.
Roaring kitty.
Who's cleaning up on you guys. Not to mention, I'd like to go off to the side a little bit. GameStop's no dummy. I talked about this on the closing beat. When this happened with AMC last time, AMC couldn't do anything about it, but they needed the money. So they did what's called a mixed shelf offering. And basically, it's a way, if we wanted to sell shares in Jazz Wealth, we'd have to go to the SEC and apply and register and make sure all of our stuff's in line. Well, what they did is they said, we would like to register to sell everything. We want to sell bonds. We want to sell stocks. We want to sell debt, but not right now. We want to create this package that essentially the SEC doesn't say you're good to go, but there's a timing period. So essentially to get everything registered correctly, and then literally take all that stuff and just put it on the shelf, like in the CEO's office, just sitting right there. Meaning at a moment's notice, they could just go sell 45 million shares and not have to go through the registration process. They did that, which was genius.
Dang.
Because as that happened again, you know what they did? Reached their happy little butts off that thing and they sold everything they could, made almost $1 billion. GameStop is like, oh man, shoot. Yeah, we should do that too. So just the other day, they said, hey, we want to do a mixed shelf offering as well. And so now they're just going to sell right into you. They're going to use that moment to raise a bunch of cash and then hopefully turn their businesses around. But incredible. And the other side of that, about $1 billion, for AMC. Hey, guess who made money on that? 2.5% to, I think, Deutsche Bank, 2.5% to Goldman Sachs, 2.5% to UBS, right? Yeah, they're cleaning up on you guys for just playing around with this stuff.
Yeah, there's too much risk here. And you've got to understand the risk. I mean, this guy's, he obviously knows what he's doing. He's taking massive risk to do it. But for the average everyday investor, sure, there's the cool opportunity potentially that it could shoot up. It's got to be timed perfect at this point.
It's a day trading stock at this point.
Absolutely. It's already priced itself in, at $26, $30. It went, it bounced to recently up to almost $60 and then came right back down. 40 to 60. I'd have to look back at the charts, but
65.
Yeah, it's a dangerous game. It's a dangerous game. But yesterday I saw a police officer wearing a pilot's uniform. I thought it was a bit odd. Then I realized he was one of those plain clothes cops.
Did you just get coffee on my table?
Maybe.
Okay, I got one for you then. I was a little rough last week, so I'm gonna use up on it.
You had to edit your
in
sound.
honor of Kevin, who might have some issues and has been out of the office here. What do you call a fight between a Mexican and a Catholic priest?
Cody is in the background looking at me right now. Like,
what do you call
going?
A fight between a Mexican and a Catholic priest? Alien versus Predator. Kevin said I could tell that one.
The Catholics are going to be really upset.
I'm Catholic, born and raised, man. First Holy Communion. I rang the bells. You don't know what that means because you're not. So okay. I'm qualified on both levels there. Don't come at me. And I'm Puerto Rican, so
half.
I'll steal your radio.
Unless you ask Mama Jazz.
All right. Yeah. See ya. Goodbye.